My guest today is Krishna Mohan. He's an award-winning serial entrepreneur, investor, business mentor, speaker, #1 best-selling author, as seen on Fox TV and multiple media outlets. He is a highly successful senior business leader with extensive turnaround experience in helping 3 Fortune 500 companies and several startups. He's built and successfully exited businesses in 10 different industries over the past 28 years. Krishna has a master's degree in marketing management, MMM, an MBA, international business, and an MS in finance. Welcome to the podcast today, Krishna. Thanks for being here with me.
Thank you, Sophie. Thanks for the wonderful introduction.
Oh, it's my pleasure. I'm excited to chat with you because I think you have a lot of really substantive knowledge that a lot of startup founders can really benefit from. Can you just give us a brief overview of your personal journey and how you got into this world, please?
Yeah. So I'm actually more from corporate background. I started my career in sales, and I did that for over a decade, and then worked in almost like 7, 8 different industries. Through that, what I realized is what makes these companies successful, right? What makes these Fortune 100 companies successful? What did they do right? But at the same time, what is it not working for them, right? What are the things that I think that they need to do that could even take them to the next level? So I'm always coming from that kind of a mindset, and I transitioned from there to small business world, and I started helping smaller businesses because there are about 30 million small businesses in US, and the failure rate is beyond 50%. So I thought that can be a niche, and I started using my knowledge and my education and learning things from the bigger companies, bringing it to the main street and helping them to scale. And through that, what I also realized is many of the smaller business owners lack a lot of skills to actually build and scale a business. And I realized that that is one of the factors that unknowingly they're not realizing. Maybe they're lacking marketing skills, maybe they're lacking people skills. So I started coaching them. I did that for a while, and through that, what I realized is there are high potential companies, really small, and then slowly I started looking at it. Why not I look at it from an acquisition angle? I see some failing companies as amazing companies, but not run by right founders. That's how I slowly got into acquisitions and acquired a couple of companies, and slowly stabilized, increased valuations, and took exits. That's my journey all the way from corporate world to small business world to acquisitions, and then from there, ever since, I am primarily focused on acquiring companies and doing some exciting things in that space from there.
Was there a pivotal moment or experience that set you on the path of leaving corporate and becoming a serial entrepreneur, getting into M&A, becoming a visionary leader?
Yes. As I started climbing the corporate ladder, especially from mid-management to the senior management, with global responsibilities and, multiple stakeholders and all that, I started realizing you are less heard. You have strong opinions, but you are very, you're probably one among others, even though you have fancy titles and all that stuff, right?
Right.
And at some point, you're thinking, maybe this is not my place. And I switched companies. And again, it's the same repetitive process.
Yeah.
That's when I realized, okay, maybe maybe this is time for me to get onto myself and provide solutions that I think are the solutions for the problems that I'm seeing in the market. And that's how I started off as a management consulting company, and all of those services are revolving around the problems that I saw firsthand and the solutions, and that's how the journey started. And then ever since I started the journey, then I realized I always have big thinking and big vision. Again, even though I'm small and I started small, I have the big vision that I need to
Mm.
build a global company and a global brand. And because of my training, um, you know,
Right.
I started off right. I would say, and that's how.
It's part of the foundational DNA that you brought to your company, which is global brand and vision.
Exactly. So I would say that's the pivotal moment in the corporate world. But I learned a lot. I really am thankful for all the opportunities that I had. But it's just a natural next step that has been. And internally, I always have the drive to build something, to create something,
Mm.
to make a difference. That drive is something, um, you know, made me to just do things on my own.
Yeah, wonderful. So you're just mentioning a really interesting story to me about, I think you said a pre-revenue startup already getting acquired in a roll-up, which is amazing. So let's talk about acquisitions. Let's talk about startups. We have a lot of founders listening to this podcast. So when you're evaluating a business and thinking and helping the owner think, about maybe through should it be acquired or the buyers, consider whether it should be purchased. What are some of the top qualities or signals that you look for that maybe other people overlook?
Yeah, so I think most of the deals are generally looked at by the numbers, but more what I think is most important is the founder, right? The founder who actually built this idea, this product or this service, and what was his original vision, and what is his background, what he brings to the table. There is and there will be a hidden potential in him as a
That's so, I think this is why we resonated when we first met at Select USA. This is exactly what I look for when I'm evaluating somebody for a visa or a green card. It's these overlooked personal aspects of the founder, their vision, their background, what they bring to the table. Please go on.
Yeah, so I look at that mandatorily, and even the numbers look right. And if I don't feel that right, then I may not be so keen. Especially the real small pre-revenue companies or just a little bit of traction type of companies. But what I also look for is scalability, right? Does this business have if everything is done right, can this become a $1 billion company?
Mm-hmm.
Not most likely not every company, but yes, maybe two, three companies in 10 will fit into that bracket. The scalability, right?
That's a really high success rate. You think that 2 to 3 of the startups you evaluate have the potential to become
Depending
billionaires?
on the industry we are talking about,
Yeah,
depending on the
yeah.
session, depending on the subsector within the
That's
industry.
amazing.
Yeah. Um, but yes, again, these are ideal scenarios, but even if
Yeah,
I have one, I'll be more than happy.
right.
That
Of
is
course.
one other aspect that I'm looking at. The third aspect that I'm looking at is, can I take this to maybe 50 or 100 different countries, right? So that opens new doors, because there is this opportunity. If a product may not fit into one market, maybe fit into other market. The same product, same technology, same company is looked at differently in different markets. And I also look for situations like, can this become a big part of a bigger roll up? which
Mm-hmm.
i- which is like, it's almost like intuitively you figure that out, because
Hmm.
the numbers are way too low. You're not even looking at anything to substantiate, but you're looking at this. But once I see this, and I also I'm looking for synergies. What kind of synergistic value this company will bring to a larger player, which I have in my mind, right? Like, if this fits into some bigger play, let's say somebody built a technology, gadget, a device in the healthcare space, right? How will this fit into a $1 billion company's game plan? That's how I'm thinking. They
Yes.
may not know the potential. They're looking at, okay, I have this product, I have this technology, I built this. This could be, interesting and all that stuff. But then, I'm trying to raise $2 million at the moment, and these are my logical next step. 1 year down the line, this is going to happen. But what I'm looking at, what if I take as is and plug this into a larger roll up, and then get another $50 million valuation?
Wow. Very
If
exciting.
I
That's
create
life changing for the founder, especially at the early stage. If they haven't diluted that much, that's just cash for them. It changes their life.
exactly. So we over time, because of our network and relationships and deal sourcing and evaluating so many businesses and networking with various stakeholders, we have access to such opportunities. But then we are carefully looking at it, basically the diamonds in the rough. And then if we find something like that, we will be able to get into some kind of a deal with them, and those are some of the things which are little bit different from the conventional evaluation of a deal, right? In a simplistic way, typically you can look at last year's financial, you look at the consistency of their EBITDA numbers and other numbers, and then it'll have a X multiple, and that's the way you look at it. But I'm looking at few other things beyond that, and many of them may not fit into this criteria, but they may be fit into something very, very big.
Well, I think your early background in sales helped you develop this mindset because you're actually thinking about not just what the pieces are worth, but
Exactly.
the value it brings to the
That,
buyer.
that is exactly what I'm looking for, is because at the end of the day, what we are doing is creating a value, right? That
Mhm.
even the deal and the deal structure is also about, or even negotiation is about showing the value, creating the value, and deriving the value, right?
Yeah.
And then if you are not able to present that, you may be losing sometimes millions on the table, or sometimes the transaction itself.
So when a founder comes to you and they think they're raising $2 million, are they saying, "Hey, Krishna, can you help me raise from VCs?" And then you say, "Actually, well, I can, but actually, we could also do this other thing." Is it a surprise to them, or are they mostly coming to you saying, "Hey, I tried to raise 2 million, it didn't work. What are my other options?" Or
So
both, maybe.
most recently, I have a live example without naming the company. So the founder came to me, they built something pretty disruptive, patents and all that stuff. They exhausted all their personal family money and everything. Now they're at a point to raise that kind of a money. This is
Mhm.
exactly he told, Krishna, can you help me to raise this? I said, okay, yes, of course I can help you. But here is what I'm thinking after speaking with you, after seeing what you got. Um, you know, so that product fits into two different brackets. That product that they built in the healthcare sector can also, be part of a bigger play. The way it can be a bigger play is there are three steps. The step number one is they need to acquire a specific company first, and then they need to make some few changes to the original product. Now, once they do that, they need to acquire it company number two, which will have a synergies these two things, and then within this, I am creating a roll up, and the fourth one is the end user of the product, and then within these four companies I am creating a roll up, and then exit multiple will be skyrocketed. This is what I said, and then also I said you will have to bring in almost like least amount of the money to make this deal happen, because I have investors who can be part of this. In fact, in this transaction, we will be also stakeholders, and this is the only it can happen because you also are going to piggyback on our brand and our resources. And then, are you open? Then he, and then he has to stick the other partners. They're all open. They're all in it right now. The reason why they do not have hesitation is because in the normal world, you have to go and pitch.
Yeah.
You can,
Yeah. Relentlessly, hundreds of times
in
sometimes.
the best case scenario, you raise the money, but then now you have the real work.
Right. Right. That's just the preamble. That's the intro.
Yeah. Oh, yeah, the real work. And then now it takes time. And then the moment I gave this idea, they got excited and they're completely in, tell me what we need to do. And then they opened up saying that we already feel that we lost a lot of time to get here. And then now we know there are odds against us. And I don't know. How long will it take to go take this organic approach that we're taking? This looks like a shortcut for us. And if you guys are really, really willing to help us in this, we will be open to any structure. So he himself is kind of open. And why did I do that is because there is a bigger play here. We know we
Right.
can pull this off. We know we have skin in the game, and we have vested interest in this game, and we will make it happen.
So, from that founder's perspective, his equity goes down, but the pie gets way bigger. So,
Exactly.
what's his potential increase of
So
revenue?
again, without really getting specific, right?
Yeah, yeah, yeah. But just
In
as
their,
an
in
example.
their original vision, the way they are going to look at it is, um, they're going to raise that initial capital. They got to do a few things on the product as part of their plan, and they will, gain traction in the sectors, and then they're looking at somewhere maybe $50 million in the next 5 years in terms of their valuation.
Okay.
Okay, so in this game, the way that I gave this vision, this will get to at least $400 million at the exit, and then even in the process of the acquiring company one, company two, and they said company three, if we don't do the roll up, they are going to make substantial amount of money, and we can continue this as is too. Dollar
Mm-hmm.
is so strong.
Well,
So we
okay.
don't need to be rushing to get that $400 million. We can actually wait and time it in such a way because the group, the numbers can be increased to a substantial level, and maybe we can take $1 billion exit.
Wow. That's so exciting. New possibilities based on network, brand, and a new way of seeing things as part of a bigger puzzle. Wow. Okay. So, on the flip side, can you share a story about a failed venture or deal and the lessons you learned that helped
Yes,
you shape all of this in the future? Yeah.
we do have many failures. I would say more than one, but I would quote one, especially in the e-commerce space.
Mm.
We did earlier on. We were heavily focused on marketing tech companies and e-commerce. So what we realized is that the transaction that we are so basically you stage the company to sell.
Yeah.
If you look at it from a seller perspective, you can stage your company to sell and make it attractive to the buyer.
Mm-hmm.
So then again, we looked at everything looks good, and then we did the deal and all that stuff. So what we missed in that, again from the due diligence perspective, and I think this is very important, is not always the numbers will speak the truth.
Mm.
Okay, so and it's difficult to get to the truth. How do you get to the truth?
Well, and everybody's trying to position something in a particular way, and you can use numbers to tell different stories. So you have to figure out which one is real.
Exactly. So what they did was in this example, they literally um, invested heavily in Facebook ads, in all sorts of marketing. In the sense, for
It
example,
was like a leaky bucket. They had to spend a lot. They got a lot of customers, but then maybe the product wasn't so great and there wasn't
yeah.
retention.
So what we missed is that part. Like, okay, you have these revenues. How how did that happen?
Mm-hmm.
What have you done to get these revenues? So is it like, for example, right? I can invest $5,000 a day on Facebook ads and get $10,000 revenue a day. Okay, there are so many businesses they spend like $1,000 a day and their revenues are $1,000 a day. So so they can do all kinds of things like this. And
Mm-hmm.
the moment you stop this, your numbers are zero, literally.
Right.
So
Because
so
there's no word of mouth.
So
There's
there is nothing.
no.
So there is so much of activities like this that happens, especially in the e-commerce world, that you will not be able to realize. It's not right, not like a feel it, touch it kind of a environment where you shake hands and do deals. This is not like that. So you know it's a thing. So the numbers seem so attractive, so profitable. But the reality of the matter is, how do you sustain that business? How do you, like for example, right, even from the sourcing, right? Imagine you're sourcing the product, let's say from a manufacturer from China, right? What if, the tariffs hit you?
Right. Right.
So overnight, you have all the eggs in one basket and the only supplier, delivering all these things for you. So we had challenges in not being able to do proper due diligence, I would say. And then it is what it is, and then we have to move on from that. But at least we learn the lessons, to really make sure, it's always important when you're evaluating a deal to really look at, you know if you remove the founder of the business and take the business, can the numbers still fall in place?
Yeah.
Can the number So that means, is the business having the right kind of systems, processes, and people, and a reliable marketing engine?
Right. Because you want a really motivated founder who's a visionary, but then at some point the business needs to operate without the founder and it needs to be sustainable. So, and what do you think are some misconceptions that founders have about M&A? It's less spoken about in Silicon Valley, and because everything is all about venture, grow. But it's a really healthy, viable way to make a lot of money from what you've created. So,
That's right. So again, from my observation, what I realized is most of the founders, just think this is the way, because
mhm.
that path is the most prominent path, and that is the way most companies are built. And what I also realized is, I think miraculously somebody will come and give me that $100 million check. Nobody's
Right.
writing a check for you to take over your company, right? You got to be strategic in terms of who you have. These are all conscious decisions. While
Mhm.
I'm building my company, while I have just $2 million revenue, while I'm raising my capital, but I also need to have my end in mind, and that end, is not going to happen once I reach a certain level. This is a simultaneous activity that you need to do. You need to start, building your networks in the
You have to
space
do it from the beginning.
from the beginning. So I need to be strategic. I go to, business school expecting my, Goldman Sachs is going to come to my campus, right? They're not coming nowhere. Therefore, I need to build that relationship from before I start my college, if that makes sense.
Yeah.
Because so by the time you're kind of ready, you're in their radar. And then, and
Mhm.
as and because it's more of attraction than chase, even in
Right.
M&A.
Right.
So if you really want to get right valuation, you really need to be in front of the, right folks who could be your potential future acquirers, and then do your thing, what you're focusing on. But most importantly, what I would, also look at it is, at certain level where you could afford to bring some small boutique M&A expert to your team, and then run this parallelly, so that becomes, that becomes, it'll remove the burden from the founder.
Mhm.
So
Right.
basically,
Because
if
what
you look at
founders should be doing from the beginning is, okay, if I build the product in this way, it's going to attract that audience. If I build it in that way, it's going to attract them. If I let my first user be that person, it's all these fork in the road decisions that are very subtle. And if you're not intentional about them, they can put you down a lesser path, a local maxima
yeah,
path
so
pretty
you
easily.
want someone like that along with you while you're building the company, so they could, do this strategic activities, and get you, exit ready, I would say.
Mhm.
So somebody is keeping a tab on your valuation, somebody is keeping a tab on increasing the valuation, somebody who is actually planning your strategic exit. uh, this
Right.
by itself is a huge task, and as founder they won't have time. They're already, sucked into so many things that they're dabbling around, and they cannot really afford to really hire so many folks to do so many things. But if they can, even at a fractional capacity, even at any kind of a capacity, this will be a very unconventional and a strategic move, which I think will really work very well.
Yeah.
uh, I haven't seen many companies doing it, but at least at some point, if they do it, it's actually good because I saw that I can tell the other side of the story. The moment you're ready to exit, and then now you start looking at opportunities coming to the table, they're always undervaluing your business.
Yeah.
I think my company is $60 million. The moment somebody comes and puts an LOI, you say, hey, we did our evaluation. Your business is just $46 million. Then there is always this discrepancy. He said, okay, good luck. And then I go to the next door and I go to the next door and I go to the next door.
Yeah.
I lose 1, 2 years in the process. In that process, at some point, you cannot aggressively grow. So that means you are
Right.
okay growing. So you're not doing any justice in this process. You're actually not doing justice because once you decide you want to exit, you're removing your heart from the business.
Yeah. 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 Wow. So wait, what actually makes okay, so if a founder's going down that path and they need a reality check, what are the things that actually make a startup attractive to an acquirer or an investor to prepare for acquisition or a roll up?
I would, before answering that question, I would encourage them to have kind of an audit.
Okay.
Somebody independent of their business, someone like me can come and
Yeah.
just give an a baseline audit, like where are you, where am I at the moment, right, in this
Mhm.
journey. If I have to, so what are my exit options at this moment
Right.
or in future, right? So something like that. If I have to choose this exit option, maybe an IPO, maybe something else, maybe board of roll up, maybe just exit. Um, then am I ready? What are the things that I need to get this right in the next 36 months that I'm
Mhm.
not doing right now? So then at least that way I have a roadmap and I have enough time in my favor to work on those things. And then how do I time, right? So, okay, maybe should I get to a $2 million EBITDA before I even have this conversation? Okay, so if that's what I need to do, let me work on that. And then, then have this conversation, things like that. So will
Do
that
any of these do any
exponentially? Go ahead.
I'm curious about AI companies because there's so many right now. Do you think any of these fundamentals change for AI startups, or is this just the
Um,
core?
it- well, fundamentals still remain the fundamentals, but in some, it's like the perception versus reality, right? The perception of the same company will change, but the reality still is the reality.
Yeah.
So the
Okay.
perception is something which will also determine in terms of the speed and value too,
Yeah.
because AI will increase speed exponentially in anything that it does.
Right.
So the waiting game is not necessary when you are in that AI space. But then the strategic part that I talked is will become even more important if you are in AI and if you are in cutting edge technologies that are going to disrupt, because it's not simple black and white. You can be just a $500,000 company, your valuation could be $70 million.
Right.
But in the normal world, if you, it's just impossible. You,
Yeah.
in a normal world, in a normal blue collar industry, you may not be even worth $2 million.
Right.
But because of that
Or
reason,
a law firm, right? Where it's like point
any
0.7 to
traditional,
1.5 multiple. It's totally
yeah,
different.
traditional, three multiples or four multiples.
Yeah. Yeah. Yeah.
So, so here, anything is possible. So then it becomes even more important to consider the factors that I'm talking about, because the possibilities are endless. There is no limit to the upper limit, So it used to be like, building a $1 billion company, should take this many number of years, having this many employees and doing this kind of things, and eventually you become a billion. It's not like that.
Mhm.
Some random unknown company, even the next door guy doesn't even recognize, can become $20 billion company tomorrow.
Right.
It's possible right now the way things are happening, but it's not as simple as it is. But doing the right things in the right way at the right times is the key. Just how you position yourself in front of the right right strategic buyer, or again, bring it the synergies that I'm talking about, strategic value, and then how my business can fit into a bigger player, and
Mhm.
how that would add value to their own exit.
Right, because it's all about thinking about because because even when you're selling a startup, it's not like, well, I built this and it's so great, so you should pay me for it. It's I see your problem. I have a
Exactly.
solution.
Yes, I see your problem. I have a solution. Because of this solution, your business will change like this.
Yeah,
Also
yeah.
have other solution. If you choose the other solution, your business will change like that. If you do that kind of a home, and then because you add me to your business, your customer's life journey will change. And because of what my product will bring to your product, or your bigger service, you can add global partners to your business. Because you already have a global partner network, by adding this, it could add $200 million in the next 3 years. That is the value. But can I see that kind of a value? I better do the homework. These
Mhm.
of things, nobody is asking, nobody is teaching you, and nobody is bringing this to the table. It's your job to create these ideas out of nowhere.
And this isn't taught in engineering curriculum. I don't even know to the extent this is taught. Me, I don't have an MBA, but it seems like this is kind of like on the leading edge when you put it in this way. And so even somebody with an MBA might not have been trained to think
I,
about
I went to
things in
business
this way.
school, multiple times, more than once. So it was not. So I can vouch for it. So
You can vouch. Okay, hard earned experience.
it was not taught there. But what I did is, this is only the school of hard knocks.
Yeah,
Put
yeah,
it that way.
yeah,
It
yeah.
is only, being in the main street, trying and testing and pushing the roll up, and then and getting things done. I mean, you can be negative cash flow, and then
Hmm.
you could be acquired for $1 billion because of many things. Some companies are acquired because of lifetime value of customer. Some companies are acquired based on what you built that can make a difference to someone else. You have to think three, four, five, 7 steps ahead.
Right.
You also have to think for others. You have to think others stakeholders, and you have to also think other stakeholders even before doing anything with them.
Right. I love it. It's very do you play chess? This sounds like the mindset of somebody who really loves chess.
That's what I do.
Wonderful. Any other trends you're seeing? We talked about AI, maybe within the AI world or even other trends in the tech venture ecosystem right now. What is exciting you?
The exciting part, what I'm seeing right now, is a lot of companies, small companies, innovation, technology, and all that is just cross borders right now. You never
Mhm.
know who is building next from Africa. You never know who is building something else from Eastern Europe.
Right.
I'm seeing amazing companies, amazing innovation, coming from everywhere, and we are talking to some interesting companies right now. So I think it keeps us on toes. It
Yeah.
also tells us that the possibilities are right now, because technology has no borders. But what I can tell is that leveraging M&A in the startup ecosystem and the small business world is I think really securing their future in more predictable way, while they do whatever way they want to do. They can raise capital, they can do whatnot, but that is something I can confidently tell, because of the possibilities that I have seen myself. Because people who are really doing and crushing this game, they're not telling to nobody.
No. They would just keep it very close to their vest. I mean, it's amazing to be able to have this conversation with you because these are some of the, like when I'm talking to founders about their companies, I get glimpses of some of these things. But to have an expert who actually has fought hard through this process is pretty incredible. And you raised another point, and you and I originally met at Select USA in Washington, D.C., which is this amazing global conference of, top companies from around the world that are considering their U.S. expansion efforts. And so I'm actually curious because with the dawn of AI, Silicon Valley has become more insular, and you really need to be here in person to raise from VCs. But prior to that, and especially when things got kind of globalized and democratized in COVID with Zoom, founders all around the world have been raising from Silicon Valley VCs. But I'm so curious because there are many amazing startups in other countries where the founders would like to expand to the US and they would like to expand globally. And our whole conversation about, whatever, 400 million roll up valuation, that can often seem so inaccessible for somebody in Belarus or, Ghana. But they might have amazing products and really interesting traction. So of course, there are many reasons why people might want to be in the U.S. They can use their startup journey to come to the U.S. if that's a goal, or maybe they want to, address the U.S. market. But what are the opportunities for M&A for global startups with big U.S. investors and buyers?
Yeah, so they could use M&A as a strategy to enter into US. They can be part of a merger
Yeah, yeah,
because they have so many odds against them in terms of, anyways, many barriers of entry, I would say, apart from what they have. The shortcut would be, they can be part of a bigger brand,
right,
would just acquire their technology or a company and they merge to and run the show. So
right,
I'm a big conglomerate. I can buy this company and then along with the founder, and
yeah.
the founder can run that business under my business, and then I can help you to fulfill all your dreams under me. Make sense?
Right. And I can easily get an L1 if let's say you're an Estonian startup. Let's say you've worked there for a year and you have payroll and you get acquired by a US conglomerate. We can get you an L1 visa as an executive to move here. There's an very short green card pathway as well. So, sometimes founders, right? Because what you want for your company and what you want for your life might be two different things. So, but you can use them to support each other. They can dovetail. So, it's interesting to think about how an acquisition by a U.S. company might just set you on the path because many founders know they're serial entrepreneurs. They love the early stage. They don't want to mess around with growing the company. That's for people who have those skill sets. They love the invention and creation process. But if they've been struggling to do 0 to 1 abroad, they have some traction, but they know, their next startup could be so much bigger if they could start it in the US. Well, maybe they get acquired and that's their launch pad to the US. Have a great income, have stability, make sure their acquired company is well positioned and off to a good start, and then have that stable foundation to keep creating in the future. It's an exciting possibility.
Yes. So as we speak, I have a live example. I have a company approach from, without naming the country, from one of the Asian countries.
Mm-hmm.
They built amazing products. They're more industrial products. They have massive network all over the country, pretty successful. They want to expand in US, so they approached us, and now we are helping them to acquire a company in US because they have financial wherewithal, and then acquire a company which have complementary products and the market in US, and then by acquisition they can bring all of their products leveraging their customers in US, and then they also vice versa can take these products and leverage their network and sell them. Now these two companies will merge as one group, and then you could do the magic that you talked about.
Exciting. That's so exciting.
This is exactly.
Okay. We have a few more minutes, so rapid fire, quick question round. How do you balance profit with having a positive impact on the world?
Well, doing well by doing good.
What's an example of that?
So at the end of the day, we are all businesses, all about money and profits. But at the same time, I think we have core values that we always make sure that we help others. Let's say we are solving somebody's problem. We do everything with integrity and make sure that every customer or anyone that works with us will always be treated well, and then treated fairly. So we are in this for the long term. So we make sure that that we comply to the values that we have.
Right, thank you. If you could give one piece of advice to your younger self or any aspiring entrepreneur, what would it be and why?
Um, my advice would be, you don't have to wait. You don't have to. Whatever you want to do, you can achieve and do it, but then you don't even have to wait. I have to do this to do this, and then finally something will happen. It is not like that. You have to decide what you exactly want to do and just go for it. No matter where you are, no matter what odds are against you, if you are so determined, it will happen. It's just a matter of time.
Same thing about immigration. I love it. Thank you. How can a founder signal to potential acquirers that they are deal ready without publicly putting up a for sale sign?
Well, I think that's where the communication strategy. They need to have a communication strategy, which I think is one of the blind spot for a lot of these companies. So communication is not purely marketing, right? So they focus on marketing and so they still need to have some communication strategy as a game plan as a part of their growth. So that strategy would be subtly communicating to the world on all the developments, what they're doing and what they're up to, and then and like I said, parallelly build the target strategic audience that you're targeting, right? Which could be your future acquirers, and trust me, they're watching you. Trust me, they're looking for you. Uh, 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 Even I'm approached by many strategic buyers and constantly, even though we are not ready. But that just I think the communication through various channels, and then in the sense you need to control your narrative.
Thank you. And then your company is Genius Visionary Inc. So, what is your genius vision?
Yeah, I think yeah, I've stated before, but we we are we are about to build a global company, but at the same time we want to have 12 stable portfolio companies that are at least doing about $1 billion revenue annually. Is something my near term vision for the next 3 to 5 years.
Congratulations. That's so exciting. Wow. Well, Krishna, this has been an illuminating conversation. We covered so much, and I think this is a really valuable repository of knowledge for what early stage founders really need to start thinking about from the very inception of their idea, of their product or their company, starting with the end in mind, having so many options for the exit on the table. And you've really given us new ways to think about that. And I hope it starts a lot of dialogues for people. So thank you so much for being on the podcast today.
Thank you for the opportunity, Sophie. I really enjoyed the conversation.
You're welcome. And to all of our listeners, you can find the links to Krishna Mohan and his company, Genius Visionary Inc., in the show notes. Please do connect with him. Share this episode with a friend who has a startup or is thinking about starting a startup so that they have all options on the table. And in the show notes, you can also subscribe to our Alcorn Immigration Law newsletter for all the latest on immigration updates for international founders in the U.S. Thank you so much for listening.